All right, let's get right into it. Lam Research just dropped their latest earnings, and we're going to decode that call analyst style. What's the real story behind the numbers for this semi-giant? Let's find out.
So here's the headline, and it's a real head-scratcher. Lam Research absolutely crushed it. We're talking record results, firing on all cylinders. But then, the stock just went wild in after-hours trading, up, down, all over the place. A fantastic quarter gets a confused reaction. And that's the puzzle we're going to piece together today.
Which leads us to the big question, right? What is the market missing here? We're going to dig into the numbers, what they said about the future, and the big picture trends to figure out why there's this huge disconnect between these amazing results and how the market is acting. Okay, first things first, let's talk about the headline numbers. And let me tell you, on the surface, this was a clear, powerful beat. No ambiguity about it. So let's start at the bottom line. Earnings per share. Lam delivered a solid beat here. They reported an adjusted EPS of $1.26, which was a full 4 cents higher than what Wall Street was expecting. You gotta love seeing that. And the top line? Just as good, if not better. Revenue came in at a whopping $5.32 billion. That's not just a beat, that's an all-time record. It sailed right past what the analysts were predicting by about $100 million. Just incredible. But you know, for me, this is where the story gets really interesting. Profitability. A record adjusted gross margin of 50.6%. Look, for a company that makes massive, complex hardware, hitting a number over 50%, that's just a sign of incredible execution. It shows they have serious pricing power. Okay, let's zoom out and put it all together. When you look at the whole picture, it's just, wow. Revenue up almost 28% from last year. We already talked about those record high margins. And on top of all that, they returned almost $1.3 billion to shareholders. Seriously, you look at any metric you want, and it was a total blowout quarter. So, a blowout quarter. But why? What's the engine behind all this? The answer is simple, and it's the story of our time. AI. The AI boom is just creating this insane level of demand for the super complex chips that Lam's machines help build. And hey, don't just take it from me. The CEO himself, Tim Archer, said it perfectly on the call. He said Lam's product strengths are a perfect match for what AI needs. Think about it. Lam is all about building up and etching these incredibly tiny, complex layers on a chip. And that's exactly what you need to make these new monster AI chips. And this chart right here really shows you how deep they are in the AI game. Just look at where their money is coming from. 60%, a huge chunk, is from Foundry. Those are the guys making the brain of the AI, the core processors. And then another 34% comes from memory. We're talking about that super fast high bandwidth memory, HBM, that you absolutely need to feed the data to those processors. They're at the heart of it. And you know, this isn't just some vague, high-level story. Management got into the nitty-gritty. They pointed to specific tech wins that are critical for AI. Stuff like advanced packaging, which is like the super glue for stitching multiple chips together into one giant superchip, and new materials for faster transistors. They even talked about tools to build 3D memory that's stacked over 500 layers high. It's wild. Each one of these is an essential piece of the whole AI hardware puzzle. Okay, so everything's been amazing so far, right? Record numbers, AI tailwinds. So why the shaky stock price? Well, this is where the story takes a turn. It all comes down to what they said about the next quarter. This is where the market's anxiety is coming from. And here you have it side by side. On the left, that beautiful record-breaking quarter. On the right, the outlook. Now, revenue guidance is still pretty solid. That's not the problem. The problem, and the thing that's spooking investors, is that gross margin number. They expect it to drop from over 50% down to 48.5%. That's a big step down. And it's happening because of a shift in who they're selling to and, yep, the ongoing impact of tariffs. And looking even further out into 2026, they gave us a few more things to think about. They see their China business shrinking, which, again, hits that customer mix. And while the whole industry is expected to spend more on equipment next year, what we call WFE, they think that spending is going to be backloaded, happening more in the second half of the year. So, the bottom line is, this pressure on their margins, it's real, and it's going to stick around for a little while. But, and this is a really big but, if you only focus on the margin pressure for the next couple of quarters, you are absolutely missing the forest for the trees. So let's zoom back out and talk about the huge long-term growth drivers that everyone should be watching. These right here are the powerful tailwinds that can blow right through that short-term pressure. You've got the ongoing build-out of HBM for AI. You've got the non-stop race to smaller, more powerful chips. You've got this, get this, $40 billion plus upgrade cycle coming from NAND memory. And then you have brand new tech like panel-level packaging coming online. Every single one of these is a massive, multi-year opportunity for Lam.
So that's the dilemma, isn't it? How do you weigh these short-term headwinds against those incredibly powerful long-term tailwinds? Well, that brings us to the final call, our rating.
We're rating Lam Research an outperform. Here's why. We think the market is getting way too caught up in the margin story for the next couple of quarters. It's myopic. They are fundamentally underappreciating just how big and how long-lasting this AI-driven growth cycle is going to be for Lam.
So how do you play this? Here's the idea. The market is treating Lam like it's just another old-school cyclical hardware company. But it's not. It's becoming a core structural leader in the entire AI build-out. That's the disconnect. So one aggressive way to play that gap is with long-dated call options. You'd be looking out to 2026, betting that you can capture the huge upside from that NAND upgrade cycle, especially if it kicks into high gear sooner than people think.
And, of course, we have to say it. This is all for informational purposes. This is absolutely not financial advice. You can bet we'll be watching that margin number very closely on the next call. Thanks for tuning in.